Onyi PLC, consolidated statement of financial position as at when, please? I think you have your own question with you, Abi. 30th September 2017. I believe you have your questions, right? So, assets, we have non-current assets. Please call those things for me. What do we have under non-current asset, please? Call for me.
Property, plant, and equipment.
Property, plant, and equipment, then investment, that
Investment
would be goodwill. That would be goodwill, right?
That's goodwill, yes.
Then
yes,
followed by what?
Current assets, that's all.
Current assets.
Then we have inventories.
Under current assets, what do we have?
Inventories.
We have what?
Inventories.
Sorry, I'm coming. Okay, followed by?
We have trade receivables.
Trade receivables and cash, Abi?
Cash, yes.
Then cash. So these are the things we have here. So after assets, then we move on to what
equity
again?
And liability.
We move on to equity and liability, Abi?
Yes, sir.
Okay, so okay, there Abi.
Equity.
So now under equity, what do we have?
Share capital.
Share capital.
That's it's going to be of 50 kobo.
Share capital at 50
kobo.
Yes. Yes. Share capital reserves followed by
we have reserves and retained earnings. Revaluation reserve.
And okay, and our retained earnings or reserves too.
Non-current liabilities.
So you will introduce your non-controlling interest.
Yeah, non-controlling interest.
Then we now have the
non-current
liability. What do we have under non-current liability?
10% loan notes. 10% loan notes.
Followed by what?
8% redeemable preference shares.
8% redeemable.
That's why we have our current liabilities.
What do we have?
We have trade receivables.
Trade receivables.
Payables.
Trade payables. Next.
We have taxation.
And what?
Bank overdraft.
Okay, what else?
So that's all.
That is all. Who is there? The lobby. Someone is there. Okay, it's admitted. All right. Thank you. So we have done the sketch of the solution. Now let's start with the workings now. Workings. So the first working is working 1. Acquisition analysis. So what really happened, Seth? Let's check. So back to the question. Okay, Onyi PLC. Onyi PLC, a Nigerian company, acquired 960 million equity share capital of Kemi. So what happened is that it is Onyi that acquired Kemi Abi. Onyi acquired 960 million of the ordinary shares of Kemi. So how many shares do we have in Kemi, please? Let's check. Share capital. Kemi.
600. No, 600 divided by 0.5. That's, I think, 1.2.
1,200.
Yeah, 1.2. Because each share is 50 kobo, Abi. So you have to divide it by so. Yeah, so that means Onyi in Kemi, Abi. Onyi in Kemi That's 960 divided by 1.2. So this will give us how many percent, please? Abi?
Yes, sir.
80%. Then our non-controlling interest is what?
Is it 900 that they acquired? 960. They
Is it
acquired 960.
It's 960, Abi?
Yes.
Is 80% correct?
Yes, it is
Yes.
correct.
All right. So this is what we have. So if you look at the questions now, Kemi is a foreign subsidiary. Okay, let's read again so that you understand. So Oyin PLC acquired 960 million of ownership, a foreign what? Can you say it now?
Not yet.
Is it only you, everybody?
I don't know. For me, I cannot see it.
Can anyone? Are you all facing the same problem with my screen? Everybody? Eh? Okay, all of you cannot see it, Abi.
I can see your screen.
Okay, let me stop and reshare, please. Okay. Aisha, confirm now, please.
No, maybe it's from me. Maybe it's just.
I think you should exit and join again, please. I'm waiting for you. I'm waiting. Who else cannot view my screen? Hello, can you view?
I can see it now. Thank you, sir.
Okay.
So we can see your screen.
Thank you. So we know that Okemi is a foreign subsidiary, right? It is written here, a foreign subsidiary based in Brazil. Okay, is a foreign subsidiary that is based in Brazil. So now the first thing we will do now is we need to retranslate this foreign subsidiary from this BRL to Naira. You know, their currency is BRL. So we need to retranslate from BRL to what? To Naira. So you will just help me with all the information of the subsidiary, then we'll quickly do that. Okay. So the second one now, number 2, translation of foreign subsidiary financials from BRL to what? To Naira. Abi? So for Kemi now, can you color the information of Kemi for me? We have BRL here.
Yeah, we have the
BRL,
property plant and equipment.
BRL
Okay.
exchange rate
And
NGN. Everything is in thousands, Abi.
Yes.
Abi?
Yeah.
Yes.
Okay. Oh yeah, call it for me. Property. PPE. Okay. How much is it in
1.2 million?
1.2. Is it million or thousand? Should I just let me see?
1.2 million.
1.2.
1.2 million.
Okay. Next after PPE, what is next?
Inventories.
Inventory.
450,000.
450, Abi.
Yes.
Then what is next again?
Trade receivables.
How much?
420,000.
420. Then anything?
Cash.
How much?
75,000.
75,000. Then anything?
No, that's all for assets.
That is all. So the total should be 2145, Abi.
Yes.
Am I correct?
Yes.
One four five. Okay. Now we have share capital. How much?
600,000.
Followed by what?
Revaluation reserves.
How much?
90,000.
Okay. How much? What is
Retained
next?
earnings.
How much?
510,000.
No, this retained earning now, you divide it into pre and post. Abi? You divide it
Yes.
into pre and post. So what was the pre-acquisition reserve when you acquired this company?
390,000.
Show
390
me.
million.
Let's read it together. They said that this. So let's read note 1. Look at the note 1. It is the policy of OE to recognize NCI at acquisition date at the proportionate share of the net asset. The retained earning of Kemi at the date of acquisition were 390 BRL, Abi. 390 BRL. So if your pre is 390, so you just minus it from the 390. So you just minus it from that 510, Abi. So what would be the post?
120.
The post will be 120. So what else do we have, please? What else do we have?
Liabilities, non-current liabilities.
10% loan note, Abi.
Yes.
How much?
375,000.
Okay. Then what else again?
8% redeemable preference shares.
How much?
150,000.
150. Then next.
Current liabilities.
What do we have on the current? Trade payable.
300,000.
300.
Yes, taxation 120,000. That's all.
300. Then taxation 120, Abi.
Yes.
120,000. So everything should give us 2145. Okay. Now, this is what we have now. So let's follow the principle now. When you are translating now, all asset and liability will be translated at what rate, please? All assets. So what's the closing rate now? The closing rate is your reporting date. That's the rate as at 30th of September 2017, Abi.
Yes. Yes.
As at 30th September,
That's
closing
5.
rate. That's 5.0, Abi.
Yes.
Yes.
So let's do that first. So 5.0. 5.0. All assets and liability, Abi. 5.0. Share capital will skip. Now, this revaluation, okay, let's finish asset and liability first. I will come back to that. Redeemable to 5.0. Yeah, 5.0. Taxation 5.0. So let's go back now. So this revaluation reserve now, you are going to use the rate as at the date of revaluation. So when do you think that the revaluation occur? When did they say that they revalue the asset? They said the revaluation happened on so date. Let's read the note. Where do we have that note on evaluation?
30th September. That's 3.
Note 3, Abi. So
yes, towards the end. The building is to
revaluation
be
occurred.
depreciated on
Yeah,
the
yeah.
straight line basis.
I've seen it. The revaluation occurred on 30th of what? September, right? So that means
2017.
we are still going to use the 5.0. Now, share capital and pre-acquisition reserve. You will use your rate as at the date of what? Acquisition. So What date did we acquire Kemi? It was given.
1st October.
Only acquire 960 million share capital of Kemi as at 1st of what? October. So you will use the exchange rate as at 1st October 2015. That's how much?
6.
6. Abi? So can you see that this foreign subsidiary is very, very simple once you understand the principle? So here is 6.0. So your post-acquisition reserve is just your balancing figure. So you omit it. Now, how do you translate? You need 5 BRL to get 1 naira. So are you multiplying or dividing?
You are multiplying.
Dividing.
You are dividing now. 5 of this will give you 1 naira. 5 of this 1.2 will give you 1 naira. So for you to know the naira, you divide. At least in this question, a naira is stronger than BRL, right? So you divide 1.2 by 5.
240.
I hope you understand why I'm divided. So if you multiply this 240 by 5, you get 1.2. However, you need 5 of this BRL to get 1 naira. So you have to divide. So here is how much?
240,000.
No, the second one.
90,000.
90,000. Then what about the third one, please?
84.
84. Then next one.
15.
15. So, total up everything, please.
$429.
429.
429.
Like this, Abby. Oh,
Yes.
yeah, do share capital. 600. Okay, don't worry, I can do this one myself. 100. This one called 90 divided by 5.
18.
What about this? The 390 divided by 6.
65.
65.
65.
Okay. Let me check who is waiting.
I've admitted the person.
Thank you. So please be doing that for me. So post, you leave this post. You know it's going to be a balancing figure. Now do this one. 375 divided by 5.
75.
75.
75. Okay. Then 150 divided by 5. That should be 30.
30.
What about this one? 60, Abby.
60.
The 120 divided by 5.
24.
24.
Okay, so everything should give us 429, Abby. You know, this 429 should be the same here. So this 429 here will be the same. So you will now subtract entire 100, 18, 65, 75, 30, 60, 24. Subtract everything from 429. Your balance is your post-acquisition reserve. Okay, let me asterisk it so that you know it's a balancing figure. Can you do that for me, please?
$57.
60. 67. Like this, Abby.
50.
57. Okay, so we are done with the translation now. So number 3, let's read the notes, whether it is goodwill that we need to calculate first. Okay, so the first one says that it is a policy of OE PLC to recognize the NCI at acquisition date using the proportionate share. So here, they want to use the proportionate share method. They don't want to use the full goodwill method. You need to take note of that. So they want to use the proportionate share of net assets method. So that's the then Kemi sells goods to OE. So this one is another adjustment. So let's calculate goodwill. Or do you want us to treat all the adjustment before goodwill? Okay, let's calculate the goodwill, then we'll come back to the other notes. Okay. Number 3. We need to calculate goodwill on acquisition of Kemi, right? So, you know, you need to have your BRL here. BRL in 1,000, your exchange rate, and the NGN, just like what we did last week. So, what is the purchase consideration? Did they give us?
Yes, sir, it was given for 1.08 billion.
Okay, the purchase consideration was 1080 billion, Abi.
Yes.
But look at the
Yes,
accounts. They
Brazilian.
said it is in Naira time is 180, Abi.
Yes, the Naira time is 180. Investment in
Okay.
Kemi, 180,000.
So let's say 1080. Now, the date of acquisition was, the exchange rate as acquisition was 6, Abi. Do you understand?
Yes, October, yes.
Yeah, divide it, whether we'll get that 180 back.
We got it 180.
It's matching, Abi. Now,
Yes, sir.
we are using the proportionate share of net asset method. So let's close this here. So we'll just say assets acquired. Okay. So what's the share capital?
The share capital is 600.
Everything is on the screen, or everything you need is on the screen. 600 into 6.0.
6.0,
And it gives us 100, Abi. Then what
yes.
about pre-acquisition reserve?
390.
Do you know why I'm not using that revaluation reserve? Because that revaluation occur at the end of the year. So it does not occur at the acquisition date. So you don't use it. You know, this revaluation occur at the end of the year. But we don't only
acquisition.
Exactly. So you don't need it. You are not going to use that. So 65. What other things again?
I think
Did they give us
the face.
Did they give us the fair value of identifiable asset?
Check it here.
I hope everybody is
so.
following. I hope everyone is following us. We're not giving, Abi.
We're not giving.
We're not giving. Okay, so case closed then. Case closed. So what you will do is, so you add up, please. What's the total? They even said what?
No, I thought it was for Kemi. It's owing.
Total, this is 165, Abi. Okay. Now, since we are using the, what's it called? The proportionate share of net asset method, we're going to take the parent share. So what is the parent share now? Parent share will be 80% of 990. How much is that? How much is 80% of 990?
It's 792.
Okay, let me note it. The parent at 80%. 792, Abi. Are you with me?
Yes, sir.
Then what about this one too?
Okay, for that one, 80%.
80% of 165.
132.
So this is what we need, Abi.
Yes,
However, let's quickly do our NCI too, so that we won't trouble ourselves later. With that. How would it? That one is the
sorry, sir.
NCI at 20%. Okay, how much is it? So 20% of 990 is how much?
I'm using
20% of
198.
198. Oh yeah, do the same thing for 165 too.
33. 33.
33, okay. So now what's going to be the goodwill? So the one I colored in yellow, that is what you will subtract. So you will subtract this 1080 from 792 and 180 from 132. You understand? I just do this NCI for later use, so we don't need it now. So what's the goodwill? That's why I color those one that we need. So let me even say this one is, let me call it A. A. Then this one, B. Then my goodwill is
A
A
minus B.
minus B. You understand, Abi? How
Yes, sir.
much?
I'm calling minus 792. You have 288 for there.
Okay, what about this one?
165 minus 180 minus. We have it as 48.
Okay. So this is our goodwill. So, there is one exercise that we need to do. This goodwill that we have now is at the date of acquisition. So we need to calculate the goodwill at the reporting date. Abi, then the difference is our exchange gain or loss. I hope you understand, right? So this goodwill
Yes, sir.
was at the reporting date. So we need to revalue it as at the acquisition date. So we have retranslation of goodwill at the reporting date. Retranslation of goodwill at the reporting date. So goodwill at acquisition date, that's a 288 divided by 6.0, Abi, which gives
Yes, sir.
you 48. Now, what is the goodwill at the reporting date? At reporting date. So it will be the same 288. Then what is the exchange rate at the reporting date?
5.
Is it 5.0, Abi? Someone is
Yes,
awaiting.
sir.
Please help me admit the person. So how much is this?
So 288 divided by 5. We have it as 57,600.
So 57,600. So this 57,600, you quickly come up here. That's your goodwill. 57,600. Then the difference is your exchange gain. It will be gain, Abi, because at the reporting day, your goodwill was 48. Now it has increased. So this is the exchange gain. So how much is the gain?
Okay, our exchange gain is minus 48. That's giving us 9,600.
9,600. This is the gain. So we need to pass the entries for this gain now. So the entries for the gain, we need to pass entries for the gain. So you credit your goodwill, which I've already done. I mean, you debit your goodwill, sorry. This is already done because we have taken goodwill at the higher rate. Then you credit your OCI with the parent share. Okay, that's 80%. Then you credit your NCI with 20%. Why I'm doing 80-20 is because the goodwill is that of the subsidiary. And anything that will affect the subsidiary must be borne by both the group and NCI. So what's the ratio, please?
But sir, since it's you said that it is proportionate we are doing. So I think the goodwill was derived as a result of basically the consideration of only the parents now.
This is not impairment now. This is not impairment. It is
Even if
impairment
it is
that
goodwill too. Like
no,
goodwill character.
no, this is not impairment. What we have here is exchange variance. So,
Okay.
and the exchange variance will be adjusted through the subsidiary's profit. So, subsidiary's profit belongs to two people. But suppose it was impairment, then you will follow that principle of adjusting the 100% amount to P or L. You will not share it.
Sir.
So, impairment, that principle is applicable to impairment only. So, what is the ratio?
7,680.
7,680. And what about this one?
1,920.
So we are done with this now. We don't need to pass entries for this. Let me color it. Since all right, so we are done. So let's check what other things is left. Let's read the other part of the question. So we are done with note 1. Let's focus on the note 2 now. This note 2. Kemi PLC sells goods to Oyin. So who is Kemi? Kemi is the subsidiaries, right?
Yes.
Are you following? Subsidiary sells goods to parents at cost plus how much? At cost plus a markup of 33%. So it was done at, I think there is a mistake here. It's 33 1/3 actually. 33 1/3. How would I do that? Yeah, 33 1/3. Something like this is
That's it.
we call 33.3333, Abby. It is like this. So at 30th of September 2017, Oyin held 15 million of the goods. That means the closing stock is still 15 million, right? Naira. So the goods was purchased at an exchange rate of this. So this is not, let me check, is that a message or a new admission? Okay, the person is admitted. So let me read it again. Kemi PLC sells goods to Oyin PLC at cost plus 33%. So at 31st of September, Oyin held 50 millions of these goods. So this is a question on its own. So there is an intra-group sales between the parents and the subsidiary, and between the subsidiary and the parents, right? And the closing inventory is 15 million. So we can easily calculate our unrealized profit, Abi. Should we do this one first before we move on, continue with the remaining grammar? So let's calculate.
Yes.
Let's calculate unrealized profit. So number 4.
So
Intra-group trading. So remember, the sales is from Kemi to who? Oyin. Is
the
from the
parents.
It's from the subsidiaries to parent, Abi. So this means
Yes, sir.
this is an upstream transaction, right? Upstream transactions from the subsidiaries to the parent. That is from down to up, top. It's from the down to top. So you are looking up, that's upstream, down to top. So from the subsidiaries to what? To parent. So the closing inventory is how much? What is the closing inventory? They said that Onyi sell goods to Kemi sell goods to
Okay,
Onyi
50 million.
and there is a 15 million closing inventory, Abi. The closing inventory is 15 million. So how do we calculate unrealized profit now? They say it was done at a cost plus markup of 33 something, Abi.
Yes, sir.
So it will be
convert
now
it to margin.
33.333 divided by what? 133, Abi.
Yes, sir.
Divided by 133.3333. Then you multiply it by what? 15. Am I correct?
Yes, approximately 25%.
So how much is the unrealized profit?
That's 375. 3,750.
3,750. This is our unrealized profit. Abi, this is our unrealized profit, 3,750. Am I correct?
Yes, sir.
Okay, so yeah, good. So this is our Maureen. Are you with us? Hello, Maureen. You used to be the one speaking. I think Babalola is taking charge today. Maureen, can you hear me?
Yes, I can hear you, sir.
So you allow the guy to take charge, Abi. He used to be the one calling figure for me. What happened today?
Not sir.
Okay, great. Well done, Babalola. Yeah, I'm feeling you, Jerry. I hope every other person too is joining. I'm feeling my brother. All right. So this is the unrealized profit. Now remember that. So the next thing is for us to pass entry. So you credit your inventory. First of all, you credit your inventory 3750 because you need to remove it from your inventory. It's unrealized. Now the debit entries now, because the sales is from the subsidiaries to parents, this unrealized profit will affect the profit of the subsidiaries. So because the unrealized profit will affect the profit of subsidiary, then it must be apportioned between the parent and the NCI. However, if the transaction is from the parent to subsidiary, then the unrealized profit will affect the profit of the parent alone. You don't apportion, parent owns everything. But now it is the Kemi that we need to adjust this 3750 from our profits, right? So what it is implied is that we must apportion that debit to both the parent and what NCI. So you debit group P or help with the 80%, and you also debit NCI with 20%. So how much is it? 80-20.
3,000.
Hmm?
3,000 and 750.
750. So we are done with, let's continue now. So we are not done with the question yet, so with this one. So we are done with the colored one. Now the goods were purchased at an exchange rate of 1 for something. This one is irrelevant to you. You don't need this one at all. This statement is irrelevant. So Onye PLC sent Kemi a payment for 15 million. Okay, Onye PLC sent Kemi a payment for 50 million to clear the intragroup payables. Kemi received and recorded the cash on 2nd of what? On 2nd of what? October. So I want somebody to tell me what is this implication of this transaction, of this statement. Who can explain this to me? And
Cash in
how do we?
transit.
It is cash in
So
transit, right? So what is
yes,
the
and we
entry?
have
What is the
intragroup
entry?
payables. So I think
What is the entry?
we're going to debit our cash
And credit what?
and credit the payables with that
Why
15
crediting
million.
payable now? No, payable has been settled now. It is the receivable that you need to adjust it from. See, they said that a payment has already been sent to clear interest.
Okay,
See,
receivables.
Onye
Receivables,
PLC
yes.
sent Kemi a payment of 15 million. So the moment Onye sent that payment, Onye has already cleared intragroup
Clear
payable.
is payables,
However,
yes.
Kemi has not received the money. So if Kemi have not received the money, Kemi will not adjust the receivable. So now what you would do
Until
is
when you
to
receive.
just yes. So what you would do now is to receive the cash. So this is cash in transit. Well done. So you debit cash 15 and you credit receivable 15. Okay? So
Yes,
that
sir.
is what you do. So you net it off from receivable. Okay, so let's move
Hello,
on.
sir. Sorry, sir. I have a question.
Please go
Sir,
ahead.
the receivable of who? Is it for Kemi or for Oyin?
The receivable is in the books of Kemi now. Kemi is the one that have not received the money. Do you understand?
Yes,
Onye
sir.
has already, the moment Onye paid, Onye has cleared the payables. However, Kemi have not received it. Kemi will still be showing it as a debt, a receivable. So that is, you understand, Abi?
Yes, sir.
Yeah, okay, good.
But sir, they said I think Kemi received and recorded the cash.
This is after the end of the year.
After it 14 days.
After the reporting date, it was when Kemi recorded it. So, but as we are preparing for 30th of September, so we must adjust for it to balance the related parties books. Intercompany, we must record it to balance the intercompany. All right, let's look at the next one. On 1st October 20, the last note, on 1st October 2016, Kemi PLC purchased a leasehold for 375 million BRL, taking out a loan note payable after 5 years to finance the purchase. The estimated useful life was 25 years with no residual value. The building is to be depreciated on a straight line basis. The building was originally valued at 450 million on 30th of September, and the directors have included the revalued amounts in the financial position. So what they told us is that they have already passed the entries for this revaluation. Do we have any revaluation in the books of Kemi? Do we have any revaluation for
Yes.
Kemi at all? How much?
Yeah.
Let's check.
90.
Revaluation 90. So since they have already passed the entries, we don't really have, what we would do is to check whether what they have passed is correct or not. And if what they have passed is correct, we'll move on. But don't ignore the note. First of all, you check whether what they have passed is correct. So PPE revaluation. So what is the cost? They say the cost. What is the cost as at the beginning? The cost
2016.
1st October 2016. They say it's 375 BRL, Abi.
Yes, sir.
And the useful life is how many? How much?
They said useful life.
25 years.
So
25
depreciation now.
years.
Depreciation is
Mhm.
375 divided by 25. How much?
15.
15.
15, Abi. So what will be the carrying amount now as at? This will be 30th of September 2017. So what was the carrying amount as at this date? That will be 360, Abi.
Yes, sir.
Hmm?
Yes, sir.
Then what date did they revalue it? They say it was revalued on this date. It was revalued to 450, Abi.
Yes. On
So
30th of September.
yeah, revalued amount 450. So that means our revaluation reserve is how much? 450 divided by minus 360, sorry. This should be 90, if I'm correct.
Yes, sir.
Yes.
So that means the entries they were supposed to pass is debit PPE 90 and credit revaluation reserve 90. So if you check the question, you will see that there is a revaluation reserve of 90, Abi. Can you see
Yes.
it?
Yes,
There is a
sir.
revaluation reserve of what? 90. So what it implies is that the entries is already passed. So please ignore this posting because it already been done, Abi. They've already done it, so you ignore it. So this one is just like a poison for you. If you go and pass it again, you don't lose a mark with that. Okay, so I think
So I have
we
a
are
question.
done. Please go ahead.
Sir, in the sale of goods that they gave us, that they said, okay, you had 15 million naira of it, you asked us to ignore the whatever exchange rate. Assuming that the 15 million naira was not in naira, are we going to make use of the exchange rate?
You will have translate now, but since they have already done the translation for you, why do you want to bother yourself?
Okay. And sir, again, how are we going to determine the intra-group sales here? Or we will not need it? Because they only said 15
No,
million of the goods.
we are not computing CPL now.
Okay, yes, okay. So thank
Too
you.
much book. Okay, let's do reserve. We have Onyi PLC, and we have Kemi PLC. Onyi and Kemi. So what is the reserve as per account? Reserve as per account. Onyi how much?
Only is so
525,
evaluation
Abi.
reserve.
Reserve, not evaluation, please. Retain
Okay,
earning.
retain any 5 to
That's
5, 5 to 5.
525.
Mhm.
Then what about Kemi? So for Kemi now, we'll add up the pre and post together. That's 65 and 57, Abi. You add up the pre
Yes,
and post. 65 plus 57 is how much?
122.
120,
2.
122, Abi. Then
Yes.
less pre-acquisition reserve. What is a pre now? So go back to the same stuff again. There is a
That's
pre-acquisition
65.
65, Abi.
Mm.
65. Okay, so what do we have left? The difference.
57.
Hmm?
57.
57. Now this 57 now, you will share it. That will be 80%, Abi.
Yes, sir.
So share of post. That's 80% of 57. How much?
We have 45,600.
Please admit that person. I hope we don't have intruder among us. Please always ensure that wherever you are admitted, they are one of you. In case you see anybody that is not part of that is not one of us, let us know so that we don't cheat PWP. The class is exclusively for PWP students. Don't allow anybody that maybe the link has been shared, I don't know. Please don't allow any intruder to join us so that you guys don't cheat PWP. All right, so let's do reserves now. So anywhere we have debit P or L. Number one, nothing, Abi. Number two, do we have anything to reserve or P or L? Nothing. So this one is going to OCI. It's not, so we'll take it separately. It's not our reserve. Okay. Then here we have debit P or L, Abi. Are you with me? Hey guys, are you with me?
Yes, sir.
So this is unrealized profit. Let me take note of that.
Sir, please, I'm not seeing your screen.
Are you the only one or all of you? Can you guys see my screen apart from her?
Yes.
Madam, just exit and join again. Your network does scatter. Okay, please exit and join again. Is she back? Are you back, madam? I don't know if she's back. Okay, so we have taken this one now, intra-group trading. The 30,000. Any other place where we have reserves to? No, have we? I think that's all. So, oh yeah, please
Sir,
add
this
up.
exchange gain, will it not affect
It's going to OCI. We'll take it separately.
Okay.
So what's the total now? That's 525, 45.6 minus 3,000. How much? How much, please? Oh yeah.
Sorry, 567,600. Sorry.
5.
67600.
I need someone to also validate the figure, please.
It's correct, sir.
Thank you. NCI. So what is the NCI at valuation? Remember, we compute NCI that time now. We kept it somewhere. Where is it? The NCI. That's this 33,000, have you?
Yes,
You
sir.
understand? 33,000. So what is the share of post-acquisition profit? What is the share of post? So that means this 57 now, what's 20% of it? 57, what's 20% of it?
11,400.
11,400. So anywhere we have NCI, that's the final bus stop. So let's check. Number one, nothing. Number two, nothing. Number three. Okay, we have
Unrealized profits.
1,920.
1,920, Abi. That's exchange gain, Abi. 1,920. Where else again?
Unrealized profit.
750.
750. Okay. 750. We'll debit have unrealized profit. What else do we have? Okay, passion. That's a total, please.
What's the total?
45,570. You should confirm.
45,570. Okay, let's balance our account now. Oh yeah. What do we have for PPE now? Just sum it up. PPE, we have 945. Abi?
Mm-hmm.
945 plus what's the translated PPE for this guy? 240, Abi?
Yes, sir.
Hmm?
Yes, sir.
240. So total.
Okay,
Total.
that's all. There's no need for adjustments.
Nothing.
No need for depreciation. Okay.
No depreciation now.
1,000, 1,800, as like
1 million.
1,185,000.
Okay, so can you sum up these two?
$1,242,600.
Abi?
Yes, sir.
So yeah, inventory. Let's do inventory. 375, Abi? Hmm?
Inventory
Yeah,
for parents is
375
375.
plus what's it translated for this guy?
For this guy, it is 90.
90. Then we have, I think we need to minus the unrealized profit, Abi.
Yes, sir. 3,750.
3,750 minus 3,750. So what do we have?
You have 375 plus 90 minus.
That should be 4 something.
That's 461 to 50.
461
To
50.
50.
Then what's the trade receivable? The
Trade
one of
receivables
the
is 300.
300.
Mm-hmm.
What's the one for Kemi?
The one for
84.
Kemi is 84.
84.
Yes, it is summarized
Then
in 84.
we need to add something to receivable. We need to subtract something, Abi. The cash in
Yes,
transit.
intra-group,
That should be 15.
50 million.
This one, Abi,
Yes, sir.
15. So what do we have?
300 plus 84 minus 15. 369,000.
3.
69,000.
What about cash? Cash for
We're
the
going to
parenting,
cash for parents is 90.
90. Then what's it translated for Kemi?
For Kemi, cash is 15.
15. Then we need to adjust. We need to add something. Is it adding?
15
We're adding
million.
plus
Yes,
15
we
again,
had.
Abi.
Yes,
That's
sir.
the second leg. How much? That
Okay.
should be 120.
That's 120.
So add up these three, please, so that we bring it here.
Okay. 120,000 plus 369,000 plus 61,250. We have it as 950 to 50.
950
50 to 50.
to 50. Okay, so total this now. This is 2 million watts.
Okay, that one I should total it plus 1,242,600. 2,192,850.
Okay. Now, share capital. What's the share capital of the parent?
The parent share capital is 450.
450. So this revaluation reserve, I think we have this one for Kemi. How much is it, sir? It's 18.
For Kemi, yeah, we
18.
convert it 18. Yes.
Then what is our return earning? The one with workings. Let's go to the workings.
Our CRE.
567, 600, Abi.
Is it the workings we did for return?
Yes.
Yes, 567, 600.
567, 600. So total the three. Total. What's the total?
So which three? Okay,
450, 18, 567.
plus 18,000 plus 567, 600. We have it as 1,035,600.
Okay, so what is the NCI?
Our NCI figure is 45,570.
Let me check. 45,570.
570.
So total, please. 1035 plus that 45,570.
We have it as 1,081,117. 1,081,117.
So this loan note now, let's pick it. The loan note is
300 for
300.
parents.
Then the translated one is what?
The translated for this is 10% loan note is 75.
Let me check. 75. That's 375, Abi.
375. Yes.
Then the next one is 8% redeemable.
For parents, it is 90.
90. What about translated?
Translated, it is 30.
That's 120, Abi.
Yes, sir.
So
Yes.
total these two. That should be
370.
495.
Yes, sir.
Okay. That should be 495, Abi. Okay.
Mm-hmm.
Now let's move on to current liability. What is trade payable?
Our payables for parents is 375.
375. Oh, we have missed something. Oh, please. There is other reserves. The other reserve is that exchange gain.
That exchange gain.
Yes. How much is it?
It was for parents.
The one of that's 7680.
Yes, sir.
7680.
7680. Yes, sir.
I know we can easily forget that thing. In some materials, they will copy, they will add it to your return earning, but me, I prefer showing it separately. So please, can you give me the new total here now? New total here and here. Some people will add it up with your return earning, but the normal thing is to show it separately because you recognize your exchange
We have
gain in
1,043,280.
yeah, add it with 45,570.
We have it as 1,088,850.
Okay, what's our payable? We have 375 and
Plus payables for this is 60.
plus 60.
Yes.
How much the total?
435. 435.
Okay, what about taxation?
For parents is 105.
105.
Yeah.
Then the other one call
24.
That should be how much? 129, abi?
129.
What about bank overdraft?
Parent alone, 45.
What about subsidiary?
No
What about
subsidiary, just parents.
no?
Mm.
Oh yeah, add up these three.
We have 609.
6.
09,000.
Oh yeah, check whether this account's balance. So before we start our fasting and prayer. Show balance.
So what do you have there? In
No,
the
tell me what you have.
2,192,850.
Yeah, it's balanced.
Okay, I think it's balanced.
Yes. So let me save this solution. I'll send it to you guys now in your class platform. Okay. So that's the end of. So that means with this now we are done with foreign subsidiary. All right. So we are done with foreign subsidiary now with this. We are done. So let me also stop recording. So I will share the record. I will upload the recorded version soon. So the last, I told you that I'm not going to start a new topic today.